Koss Corporation had encountered a scandal involving fraud done by its employee known as Sachdeva. So here is the brief description on the company's background. Okay, Koss Corporation is known as a leading maker of stereo headphones. The company was invented in 1971 and the founder is John Koss and his partner, who is Martin Lange. Koss Corporation also manufactures several electronic items, but the main items that manufactured by Koss Corporation is stereo headphones. Koss Corporation are considered as small company by Securities and Exchange Commission because capitalization of the company is less than $75 million and the total number of employees is 73 at that time. So this is the brief explanation about the company's background. The next part will be continued by Atika.
Thank you, Alia, for the brief description on Koss Corporation background. Now I will explain on the nature of the fraud and also when it was happened. In the case of Koss Corporation, the fraud arose due to misappropriation of assets. Asset misappropriation is the dominant fraud scheme perpetrated against small businesses, and it is when a perpetrator steals or misuses organization assets. This is what exactly happened in Koss Corporation. The company's Vice President of Finance and Secretary, or what we call this the CFO, Sujata Sachdeva, was accused with 6 counts of using interstate wire communication to defraud Koss Corporation, amounting to approximately $31 million, despite the 206 counts of actual wire transfers. She authorized and admitted stealing approximately $50 million. Thus, she was sentenced to 11 years prison and $34 million restitution to Koss Corporation. The fraud has begun since 1997 and only been discovered in 2009. Through the 12 years, there was no one suspected her acts. Thanks to American Express diligence, the fraudulent activities were exposed. Sujata Sachdeva has done the unethical acts of fraud by few ways as seen in the case. There are 5 ways that can be detected, which is the intimidation of lower level employees. The second is the sole approval for large expenditure made through American Express and other credit card and other corporate credit card. The third one is the lack of supervisory review and also approval by the CEO. The fourth is on the lack of audit committee oversight and also ineffectiveness of internal audit function. And the last is through the false journal entries and also fraudulent adjustment. Okay, the first point is on the intimidation of lower level employees. Sujata Sachdeva, with her power and authority, she misused them to intimidate her lower level employees to cover up her deeds. The US Securities and Exchange Commission, the SEC, had charged Koss Corporation's former accountant, Julie Mulvaney, for assisting Sachdeva in concealing her fraud by overstating the assets, expenses and also cost of sales, while in the other hand understating the liabilities and also sales of Koss Corporation's financial statements. The act of fraudulence was accomplished through a variety of tactics, which include fraudulent wire transfers, unauthorized payments from petty cash, and also fraudulent cashier's checks. They are able to hide the huge amount of cash missing by means of top-side general journal entries. So, the SEC accused both Sachdeva and also Mulvaney in civil case of maintaining fraudulent records, which results in materially false current, quarterly and also annually reports being filed by Koss Corporation to SEC for several years. As Mulvaney did not benefit through the massive embezzlement, she was not charged with the fraud. However, she involved materially to cover up the fraud done by the Sachdeva and thus charged with the civil fraud. Okay, now we move to the second point, which is the sole approval for large expenditures made through American Express and other corporate credit cards. Sachdeva authorized numerous wire transfer of funds from Koss bank account to pay for her personal American Express credit card bills. Besides that, she also used the company's money to fund cashier's checks, which were being used to shop for her personal belongings such as the clothes, purse, and also the jewelries. And in addition, she funds her travel expenses and also the house renovation through the same way. The complaint to SEC on 30th August 2010 exposes that Sachdeva and Mulvaney get the cash by circumventing the internal controls of the corporation. Sachdeva admitted stealing by authorizing issuance of more than 500 cashier's checks to pay for her personal expenses. Furthermore, she also authorized more than 200 wire transfers to American Express to settle for her credit card bills. Other methods of fraudulent misappropriating cash for personal use include a misuse of petty cash. Sachdeva issued checks payable to petty cash, and then she had the Koss employer to then negotiate it and return the money to her, which she used to pay for her personal expenses. Sachdeva also converted unused travelers' checks that the company had purchased for the use of its employees traveling on company-related business and fraudulently used them for herself. Thirdly, the reason why the fraud occurs is through the lack of supervisory review and approval by CEO. Apparently, each year, Sachdeva would review the company's cash positions a few weeks prior to a scheduled visit from their external auditor, which is the Grant Thornton. She would presume the difference between cash in the company's bank accounts and the related ledger accounts. She would presume that because of her theft of the company's fund. Hence, she works together with Mulvaney to adjust it and make the journal entries that no one will question about. The company's trust on Sachdeva also is a reason why she has the authority in approval and decision making without being questioned and reviewed by the CEO. This makes the fraud flows easily as no one would question her actions. The fourth point is on the lack of audit committee oversight and also the ineffectiveness of internal audit function. So, according to the committee's report contained in the proxy statement, it appears that the audit committee might have relied heavily on the internal control work of Grant Thornton. The report notes that the committee meets twice a year with the company's independent accountants to discuss the result of the examination, the evaluation of the company's internal control, and also the overall quality of the company's financial reporting. It is also stated that the audit committee oversees the audit work performed by the company's internal accounting staff, hinting that there might have been an internal audit function. Grant Thornton have somewhat disagreed on the conclusion that they were involved in the evaluation of Koss internal controls. The 2009 proxy statement reported that among all 4 non-Koss board members of the audit committee, no one possesses specialized accounting or financial experience. This strengthened the fact that the fraud occurs due to the lack of audit committee oversight, as they do not have the required knowledge on the issue. Lastly, Sachdeva committed the fraud through the false journal entries and fraudulent adjustments. Mulvaney helps Sachdeva by maintaining a red book containing numerous false journal entries to the company's accounting books and records. She wrote the false journal entries in the red book and then entered them in the company's accounting books and records. Next, she purported to adjust or reclassify the amount of company cash without supporting documents or any legitimate explanation. Moreover, the complaint also notes that she prepared falsified accounting books and records and maintained them in a series of colored folders called the rainbow files. The rainbow files consisted of 7 folders covering fiscal years 1995 till 2000, which is the green folder, 2004 the orange folder, 2005 the blue colored folder, 2005 also the orange colored folder, 2006 the blue one, 2007 yellow, and also the last one is 2008 the green one. The rainbow files included more than 100 fraudulent transactions on the company's books records. The rainbow files also reflected a scheme to conceal the receipt of funds by the company through a debit or credit wipe, which is we can call it as DC wipe. A DC wipe which made it appear that a certain transactions, for example a sale to a customer and the receipt of funds by the company, never took place. For instances, in December 2007, Koss received funds totaling more than $100,000 from an overseas customer. Mulvaney falsified the books and records to make it appear that the company never received the funds. Instead of reducing a single sales account by the whole amount, she reduced 5 separated sales accounts by different amounts, which collectively totaled the exact amount to avoid detection. The fraudulent accounting cover-up also involved the company's sales over the internet and also at its retail outlet. From fiscal year 2006 through the time the fraud was discovered during the second quarter of the fiscal year 2010, Sachdeva and Mulvaney didn't record in Koss books any sales made over the internet or at the company's retail outlet, totaling $1.8 million. Alright, that is all about the nature of the fraud and also how and when it is happened. So we move to the next part.
Thank you, Atika. Next, I will explain how the fraud was discovered. The fraud was not discovered by internal or external auditor, neither the internal whistleblower. The external whistleblower, which is American Express, report the fraud because American Express was suspicious of the huge amount transferred from Koss Bank to pay for Sachdeva's credit card. American Express then contacted Michael Koss, who is the CEO of Koss Corporation, regarding the wire transfer. Michael Koss then reported this issue to the Securities and Exchange Commissions, and further investigation was started. Then, the fraud was uncovered on 19 December 2009. Next part will be explained by Farah.
Okay, thank you Atika and Alia. I will continue on the next question. What action were taken against the company and by whom? On October 24, 2011, the Security and Exchange Commission, SEC, filed a complaint against Koss Corporation and Michael J. Koss, its CEO and former CFO, based on Koss Corporation preparation of materially inaccurate financial statement, books and record, and lack of adequate internal control from fiscal year 2005 through 2009. In an unusual, the SEC initiate enforcement action against Michael Koss. Michael Koss settled with the SEC in October 2011. As part of the settlement, Michael Koss must pay back a bonus of $450,000 cash and also $160,000 option. Michael Koss, who remained president and CEO, agreed to pay back the bonus. The company faced no monetary penalty. In related to the criminal matters, Sakdeva pleaded guilty to 6 counts of wire fraud on July 16, 2010. On November 17, 2010, she was sentenced to 132 months in prison and ordered to pay restitution of $34 million. On March 8, 2011, she was suspended from appearing or practicing before the SEC. The SEC has also filed suit against Julie Mulvaney, a former assistant to Sakdeva. The SEC is charging Mulvaney with aiding and abetting in the fraud. A trial date is scheduled for at 2012. In her deposition, Sakdeva testified that Mulvaney assists with the embezzlement. Due to the fraud happened, Koss external auditor Grant Thornton were terminated day after the fraud was uncovered. Koss Corporation as well as its shareholder sued Grant Thornton for failing to uncover the fraud, but later the lawsuit was dismissed. The U.S. District Judge in the case, Lynn Enderman, ruled that the occurrence of frauds and subsequent failure to detect it does not imply willful, knowing or reckless behavior on the part of Grant Thornton. Rather, the firm was found to be negligent. Koss case against Grant Thornton was settled with $8.5 million from the accounting firm. Koss shareholder also filed a lawsuit against Michael Koss and Koss Corporation. It is claimed that the willful and reckless behavior as part of Michael Koss. This case is still open. Lastly, Koss Corporation sued American Express (Amex), alleging that Amex waited too long to report wire transfer to Koss. The case was dismissed, but Koss has the option to appeal. Koss Corporation have also sued several banks for failing to discover the fraudulent transaction. These suits are pending. Okay, the next question: what is the best action to take to prevent and detect such fraud? It is quite surprising that a fraud this size was not detected earlier by the senior management or by the auditor. Some possibility include the fact that Ms. Sakdeva was a trusted employee of the company and have been with the company for more than 15 years. There is no control on principle of segregation of duties, lack of control over authorization and approval of fund transfer and check. Besides the external auditor, Grant Thornton, being over familiar with the organization, which is less professional citizen in their work, the fact that executive management was somewhat hand-off, risk management policy and procedure to detect and prevent such kind of fraud were completely missing, and as board did not pay attention on it. There are two main views. First, management has the responsibility for the prevention and detection of the fraud. Second, auditor has the expertise in the evaluation and design of control. They also review and evaluate operation and control and has requirement to exercise due diligence. Therefore, fraud and prevention and detection is audit problem also. Both management and audit have important role in this case. The best is where management and employee and internal external auditor work together to combat fraud. Audit can take a step to ensure that senior management is aware of the risk and materiality of fraud, that all instances of frauds are made known to all employees. They can also encourage management to develop fraud awareness training and fraud policy to help combat fraud. Fraud awareness training is emphasize the role that all employees have in preventing and detecting fraud, not just auditor. The corporate fraud policy is set out what employees are to do when fraud is suspected. It must be clearly convey the message that no one has the authority to commit illegal acts, even to the benefit of the company. Okay, that's all from us. Thank you for listening, and let us know if you have any inquiries on this case. Thank you.